I want you to imagine waking up tomorrow morning and seeing this headline on your phone: World War III has begun. Your first thought might be about your family, about safety, about where you'd go. But I want to ask you a different question, one that almost nobody asks themselves in that moment. What happens to your money, your savings account, your 401k, your mortgage, the cash in your wallet, the stocks you've been holding, the crypto you bought last year? Does it survive? Does it disappear? Does it actually grow? Because here's what most Americans don't realize. Every single major war in modern history didn't just redraw borders. It rewrote the rules of money itself. It changed which currencies had power, which assets held value, and, most importantly, it separated the people who came out destroyed from the people who came out wealthier than they'd ever been. And the difference between those two groups was not luck. It was preparation and knowledge and understanding something that most people never study until it's too late. My name is Danny, and today we're going to do something different. We're not going to talk about politics. We're not going to debate whether a world war is coming. We're going to study history, because history tells us exactly what happens to your money when the world goes to war. And more importantly, it's going to show you what you should be doing with your money right now in 2026 before any of that happens. Let's get into it. Before we go back in history, let me give you one current statistic that should stop you cold. According to a 2026 survey, 44% of Americans say they do not feel financially prepared for potential economic uncertainty, and 60% have less than 3 months of expenses saved. 60%. That means if the economy seized up tomorrow, not even a world war, just a serious recession, the majority of American households would be in crisis within 90 days. Now layer on top of that what the Council on Foreign Relations said in their 2026 conflict risk assessment. Experts currently give a 50% or higher probability to scenarios like a Taiwan Strait crisis or an escalation of the Russia-Ukraine war into a direct NATO conflict. These aren't conspiracy theories. These are the assessments of foreign policy professionals. I'm not saying any of these things will happen. I'm saying that the question, what happens to my money if a major conflict breaks out, is no longer a hypothetical. It is a legitimate risk management question that every responsible American should be thinking about. And here's the uncomfortable truth. Most people have never thought about it at all. They know what to do when the stock market drops 20%. They know to refinance when interest rates fall, but they have no mental model whatsoever for what happens to their financial life when the world goes to war. That's what we're building today. To understand what a world war does to money, we need to go back over 100 years. World War I ended in 1918. The guns stopped. The military conflict was over. But what most history classes don't teach you is that the financial war was just beginning. Entire European economies came out of WW1 in ruins. Factories destroyed, cities leveled, governments drowning in debt. And when governments are desperate for money, there is one thing they always do first. They print more of it. The most famous example is Germany. After WWI, Germany was forced to pay massive war reparations, debts it simply couldn't cover with actual production. So the German government did what broke governments do. It printed Deutschmarks, billions of them, then trillions, then, I'm not exaggerating, quadrillions. The result was one of the most catastrophic inflations in human history. Prices doubled every few days. Workers were paid in the morning and ran to the store immediately because by evening, their wages would be worth half as much. There are photographs from this period of people carrying wheelbarrows full of cash just to buy a loaf of bread. A single loaf of bread cost 200 billion marks by November 1923. Now here's the critical lesson, the one that actually matters for your money today. The people who lost everything in this period had one thing in common. They held their wealth in German paper currency, savings accounts, cash at home, government bonds, paper. The people who survived, and in some cases, the people who actually built their greatest fortunes during this period, held something different. They held real assets, land, physical commodities, productive businesses, and, yes, gold. Lesson 1 from WWI. In a major crisis, paper currency is the weakest link in your financial chain. But here's the nuance most people miss. The US dollar actually strengthened during and after WWI because America's infrastructure was untouched and its industrial base was intact. Germany's currency collapsed because Germany lost, and because Germany printed recklessly. The lesson isn't all currencies collapse in war. The lesson is the currency of the losing, indebted, desperate nation collapses. And the question you need to ask is, which country does that describe in the next major global conflict? World War II was bigger, more destructive, and more economically devastating than the first. Cities were erased. Japan was shattered. Europe was nearly unrecognizable. Britain, which had been the world's financial superpower for over a century, came out of the war buried in debt. But unlike WWI, the aftermath of WWI didn't produce the same currency chaos. Why? Because something unprecedented happened. In 1944, before the war even officially ended, 44 nations sent representatives to a hotel in Bretton Woods, New Hampshire, and they sat down and designed a new global financial system from scratch. The decision they made changed everything. The US dollar would become the world's reserve currency. Every other major currency would be pegged to the dollar, and the dollar itself would be backed by gold at a fixed rate of $35 per ounce. America essentially became the financial anchor of the entire world. Why America? Because America came out of World War II as the only major power whose homeland was untouched. Its factories were running, its infrastructure was intact, it held 75% of the world's monetary gold reserves. And then something else happened that most people overlook when they study this period. After the war came Reconstruction, and Reconstruction created one of the greatest economic booms in modern history. The countries that were destroyed needed to rebuild roads, bridges, housing, factories, and that rebuilding created enormous economic growth that lasted for decades. The people who built their greatest wealth in this period weren't the ones who hid their money in a mattress during the war. They were the ones who invested in productive assets, businesses, real estate, industries involved in the rebuilding, and held through the chaos. Lesson 2 from World War II. Every major war produces a new financial order. The dollar replaced the pound. A new system replaced the old one, and the people who understood which direction the system was moving made extraordinary gains. Now here's the question that should be keeping you up at night. If a third world war happened, and we're not saying it will, who holds the equivalent of America's position in 1944? Who has the intact infrastructure, the productive economy, and the reserve currency? Is it still America? Is it China? Is it no single country at all, and instead a digital, decentralized system? We'll come back to that. But first, let's talk about the asset everyone immediately reaches for when they're scared. The moment any crisis is announced, a war, a recession, a pandemic, the first thing you hear is, buy gold. And history actually backs this up. During the Vietnam War, gold rose more than 50%. During the Iraq War, gold rose more than 50% again. During the Gulf War, gold rose 20%. In 2020, during peak pandemic fear, gold hit record highs above $2,000 per ounce. But here's what the buy gold crowd doesn't tell you. It's more complicated than it looks. First, gold doesn't always go up immediately. In the first days and weeks of a major crisis, gold sometimes drops. Because in moments of panic, people sell everything to raise cash. The initial move is often fear selling, not fear buying. If you panic buy gold on day one of a crisis, you might buy at a temporary peak before it falls. Second, and this is the part of history that almost nobody talks about, in 1933, the U.S. government made private gold ownership illegal. Under Executive Order 6102, American citizens were required to turn their gold over to the Federal Reserve. They were paid $20.67 per ounce. Shortly after, the government revalued gold to $35 per ounce, a 69% increase. American citizens didn't benefit from that increase because they'd been forced to sell. Gold protects you from inflation. Gold protects you from currency debasement. But gold does not protect you from government decisions. And in extreme crises, governments make extreme decisions. Third, gold produces no income. It doesn't pay dividends. It doesn't generate cash flow. It doesn't grow a business. Gold is a defense asset. It preserves value. It is not an offense asset. You don't build wealth with gold. You protect wealth with gold. So, where does gold fit? It fits as part of a diversified strategy, not as your entire strategy. The people who came through WWI and WWII with their wealth intact didn't just hold gold. They held gold alongside productive assets, real estate, and cash equivalents. They were diversified before the crisis, not scrambling after it started. Lesson 3. Gold is a shield, not a sword. Use it as part of a balanced defense, not as a bet. Now, let's talk about the asset that didn't exist in any previous world war, the one that a lot of people under 40 are counting on as their hedge against everything. Crypto, Bitcoin, digital assets. The argument for crypto in a war scenario is compelling on paper. Bitcoin is decentralized. No government controls it. No single central bank can print more of it. No country can seize it through a simple executive order the way FDR seized gold in 1933. If you have your own private keys, your Bitcoin technically exists outside the traditional financial system. That's the bull case. Here's the bear case, and it's serious. In a genuine world war scenario, what's the first thing that gets disrupted? Internet infrastructure, power grids, Communications networks. These are military targets. They are among the first things that get hit. If the internet goes down, even partially, crypto markets freeze. You can't access your wallet, you can't execute a transaction, you can't convert to anything. The asset exists in theory, but becomes inaccessible in practice. We already have evidence of this behavior in smaller crises. Every time a major market shock hits, crypto doesn't behave like gold. It behaves like a risk asset. When the stock market drops hard, Bitcoin drops hard too, sometimes harder. The flight to safety goes to gold and the dollar, not to Bitcoin. There is, however, a second scenario where crypto could actually win. If the crisis involves a collapse of trust in the banking system itself, if banks freeze accounts, if capital controls are imposed, if governments restrict how much money citizens can move, then decentralized assets could become valuable alternatives. We've seen versions of this. When Cyprus froze bank accounts during its 2013 financial crisis, Bitcoin's price in Cyprus surged. When Argentina's peso collapsed, Argentinians bought crypto as a dollar alternative. And there's a third factor no one can ignore: central bank digital currencies. Right now, the Chinese government has a digital yuan. The Federal Reserve is researching a digital dollar. The European Central Bank is developing a digital euro. In the next World War scenario, we may not choose between cash and crypto. We may be choosing between government-controlled digital money and decentralized alternatives. Bottom line on crypto: high risk, high potential utility in specific scenarios. It belongs in a portfolio only if you understand what you own, you hold it in cold storage with private keys, and it represents a percentage you could afford to lose entirely. Let's talk about the part of the story that challenges everyone's instincts. When a major conflict breaks out, the immediate reaction in stock markets is a crash. Panic selling, massive volatility, red screens everywhere. It happened at the start of World War I. It happened at the start of World War II. It happened on September 11th. It happened when COVID began. The instinct is, get out, sell everything, move to cash. And almost every time in history, that instinct was wrong. Let me show you two numbers. After the attack on Pearl Harbor in December 1941, which brought the United States directly into World War II, the Dow Jones dropped sharply in the immediate days following. Within a year, it had fully recovered. By the end of the war, American markets were significantly higher than before Pearl Harbor. After 9/11, the U.S. stock market lost over $1 trillion in value in the first week. The investors who sold on September 17, 2001, the first day markets reopened, locked in devastating losses. The investors who held recovered those losses within a year. The investors who bought during the panic made extraordinary returns over the following decade. The pattern repeats because of something the original script from the Arab world got exactly right. After destruction comes reconstruction, and reconstruction is one of the most powerful economic forces in human history. After World War II, the industries that performed best were defense contractors, energy companies, raw material suppliers, infrastructure companies, and technology firms, the same categories that benefit today from any large-scale conflict. But here's the crucial warning. This only works if you're a long-term investor, not a short-term speculator. If you're trading on leverage, a 30% initial drop can wipe you out before the recovery. If you're close to retirement and can't stomach volatility, a 40% drawdown could force you to sell at the bottom. Lesson 4. Stocks are long-term wealth builders even through wars, but only if you hold, you're diversified, and you don't use leverage. Here's the most important section of this entire video, and I want to be very clear. This is not a prediction. This is pattern recognition from history. Every major global conflict has ended with a new financial system, not a modified version of the old one. A fundamentally different architecture. After WWI, hyperinflation, and currency chaos in Europe, the rise of the dollar as a major reserve currency. After World War II, the Bretton Woods system, the dollar as the world's reserve currency. The beginning of American financial dominance that continues to this day. If a major global conflict happened now, and again, we're not predicting this, what new system might emerge? Scenario 1. A shift in reserve currency dominance. Just as Britain lost its financial leadership after World War II, the US dollar's dominance could be challenged. China and Russia have been systematically building gold reserves and trading in non-dollar currencies for years. If the dollar's credibility was damaged in a prolonged conflict, the world might move toward a multipolar currency system, or a new dominant currency altogether. Scenario 2. Massive inflation and debt monetization. Wars are expensive. The United States is already carrying over $35 trillion in national debt. Financing a major military conflict would require either massive tax increases, massive borrowing, or, most likely, money creation. That means inflation. Potentially serious, sustained inflation. And sustained inflation destroys the purchasing power of every dollar you hold in a savings account. Scenario 3. Digital currency dominance. The next major financial reset might be digital. Governments want control over money flows, especially during crises. A war scenario could accelerate the rollout of central bank digital currencies, programmable money that governments can track, restrict, and control at a level never before possible. This changes the game entirely for financial privacy and freedom. Scenario 4. Wealth redistribution. In every major crisis, assets get repriced. Real estate changes hands. Companies go bankrupt and get acquired at pennies on the dollar. The people who hold liquidity during the chaos, who have cash or gold ready to deploy, can buy assets that permanently change their financial trajectory. History doesn't repeat exactly, but the pattern is clear. Crisis reshapes the rules, and the people who understood the old rules and anticipated the new ones came out ahead. Now the part everyone actually came here for. Not theory, not history. What do you actually do with your money today, in 2026, given everything we just covered? Let me give you a framework. Not financial advice, but a framework for thinking about this, built on exactly what history shows works. Step 1. Liquidity first. The single most important thing you can have in any crisis, war, recession, pandemic, anything, is cash on hand. Not in the market, not in crypto, actual accessible dollars. The general rule is 3 to 6 months of expenses. Given current uncertainty, I'd argue for 6 months minimum. Here's why liquidity matters in a war scenario specifically. In the early stages of any crisis, assets get mispriced. Panic causes sell-offs that create buying opportunities, but you can only take advantage of buying opportunities if you have capital that isn't locked up. Cash isn't just safety, it's ammunition. Right now, 60% of Americans have less than 3 months of expenses saved. Before you do anything else, fix that. Step 2. Diversify across asset classes, not just within stocks. Most Americans think they're diversified because they own a mix of US stocks and international stocks. That's not diversification, that's variation within a single asset class. True diversification across a war scenario looks like this. Some cash, some physical gold, some broad equity exposure through index funds, some real assets like real estate or REITs, and possibly a small percentage in crypto if you understand it, with no single category dominating. The specific percentages depend on your age, your risk tolerance, and your time horizon. But the principle is the same one that's worked through every crisis in modern history. Don't put all your financial eggs in one basket. Step 3. Understand what you own and why. The people who panic sold in every historical crisis had one thing in common. They didn't actually understand why they owned what they owned. They owned stocks because stocks go up. They owned savings accounts because that's where you put money. They owned their 401k because their employer offered it. When you don't have a thesis, you don't have conviction. And without conviction, panic wins. Write down, literally, physically write down, why you own each asset in your portfolio. What does it protect you from? What does it expose you to? What's your plan if it drops 30%? If you can answer those questions for every position, you will not be among the people who sell at the bottom. Step 4. Consider the inflation hedge. Wars produce inflation. This is one of the most consistent patterns in economic history. Every major conflict has been financed partly through money creation, and money creation reduces the purchasing power of your cash. The traditional inflation hedges, gold, real estate, TIPS, commodity exposure, stocks in essential industries, are worth having in your portfolio, not because war is certain, but because inflation risk exists right now, even without a war. In 2026, prices are still running significantly above where they were 5 years ago. The hedge makes sense regardless of the geopolitical situation. Step 5. Invest in your portable skills. This is the insight that almost no financial video gives you. In any crisis, war, economic collapse, hyperinflation, the most valuable asset you own is not in your brokerage account. It's in your head. The people who survived and thrived through WWI and WWII and every major crisis since weren't just the people with the right financial portfolio. They were the people with skills that remained valuable no matter what system was in place. Medical skills, engineering skills, agricultural knowledge, negotiation, and trade skills, language skills. In the modern context, think about what skills do you have that would remain valuable if your industry disappeared? What can you produce or provide that people will need regardless of what the economy looks like? Are your income streams diversified across more than one employer, country, or industry? Financial assets can be frozen. Financial assets can be seized. Financial assets can be inflated away. Skills cannot. Let me leave you with this. Every generation has faced a moment where the rules of money were rewritten. In 1914, the rules changed. In 1944, the rules changed again. In 1971, when Nixon ended the gold standard, the rules changed once more. We are living in a period of extraordinary geopolitical tension, record government debt, a global reserve currency system under pressure for the first time in decades, and more military conflict than the world has seen since the Cold War. Whether a world war happens, and I genuinely hope it doesn't, the financial forces that would drive a wartime financial crisis are not hypothetical. They are active right now. Inflation, debt monetization, currency competition, these are present-day realities, not future threats. The people who studied history built financial resilience before they needed it. They had cash when assets were repriced at a discount. They had hard assets when currencies weakened. They had the knowledge and conviction to hold when everyone around them was panicking. That's not pessimism, that's preparation. And preparation is how ordinary people have built extraordinary wealth in extraordinary times. Throughout all of recorded financial history, the question I want you to sit with is this: if something major happened tomorrow, would your financial plan survive it? Not thrive, just survive. If the answer is no, or if you're not sure, that's the work to do, not tomorrow. Now, if this video helped you think more clearly about this, subscribe and hit the notification bell. Every week, I go deep on the financial patterns and strategies that protect and build real wealth. Not short-term tips, but the kind of thinking that holds up when things get hard. And drop a comment below with this: if a major global crisis happened tomorrow, what's the first financial move you'd make, and why? I'll see you in the next one.